Futures Senior Market Analyst, Blue Line Futures. Good morning, Phil, and thank you so much for joining us.
Yes, thanks for having me.
So, Phil, I'd like to kick off, of course, with energy prices and crude oil. Specifically, what's your bullish case target until the end of the year?
Well, I think that we're going to have a small correction, which is what we're seeing right now. We think it's down to about $87.50 before crude oil prices start that next leg higher, as long as nothing's done on the supply side and demand continues to remain constant. We think crude oil prices could easily achieve about $100 per barrel.
Both benchmarks?
Well, easily on the Brent crude oil. We've already seen, some of the Brent crude oil they assess the pricing on it. It's already in the high 90s right now. Things for exports, you're seeing Saudi Arabia increase the crude oil prices that is going to be exported as well. So, I think that there's no stopping it at the moment.
Well, let me ask you, do you think that the current prices, which are very close to the $100 per barrel, that's for sure, might ramp up shale oil production in the U.S. once again, since, of course, prices are way, way above the break-even prices?
Yeah, that's the big talk. The problem is that you don't have any capital spending that's going into shale production. No one wants to touch that. They don't want to put any money into it because the current, political regime that's in charge is very green energy, very anti, old school methods with, traditional gasoline, traditional oil, and traditional energies. They just don't want to, they don't want to encourage that because it goes against their agenda. So that's the big problem.
Yeah, that's for sure. On the other side, of course, many things that Biden does is against his own agenda. I was wondering, what's your take on the natural gas? I'm talking about the U.S. futures today up about 0.8% at $40.44 per British thermal unit. On the other side, also pretty interesting, TTF benchmark, of course, here in Amsterdam, off about 1%. Do you think that this hit is going to stay with us for both benchmarks, or if you want to focus on the U.S. one?
Well, on the U.S. one, the volatility has been quite high. We've had very wide range of weather. It's been unseasonably warmer for the first part of the winter, and then now we're getting that cooler in the back half. We've seen the demand there. They're using natural gas for more different products than they have before. So the demand has been relatively high. Supplies have been slightly strained, but they do come a little bit more in line with the longer term seasonality. So it's a very volatile contract. It's just another one that the volatility is too high for most participants.
Phil, let me ask you, what's your take on the gold? We did see, by the way, precious metals under pressure today. And once again, the gold is the only one above the flat line. We do see silver, which is off, then copper, which is off, palladium, platinum are below the flat line. Sorry, platinum is up about 0.7%. But what's your take on the gold, and what are your short-term targets?
Yeah, platinum just jumped up actually before I came on the program. So we're looking at gold. Gold's done really well. They've been, the Federal Reserve has been just so incredibly hawkish, and everyone else has been out there that they believe that the gold market at least feels that the Fed is going to make a policy mistake, that they're tightening too late into the cycle. We're coming into an economic slowdown. They're going to disappoint. The number of interest rate hikes will back off from here. You've also seen talk that the ECB is considering raising later on in the year and then also in the next year, and that could possibly start to lift the euro against the dollar, and that has all been very supportive for the gold market. People are also concerned about U.S. equities. They think that we're going to have a big crash. You got over 50% of the NASDAQ down 50% since its latest all-time high. So it makes natural sense for people to come into gold market as just a placeholder to kind of wait this out.
So do you think that from what we are seeing from the gold, it's starting to act as a hedge once again? Yeah. Because it was not doing, let's say, its base purpose for a very, very long time.
Yeah, it hasn't been doing that at all, and it is acting as more of a safe haven. A lot of the commodities and traditional commodities are coming off the tops, so we're signaling lower highs, but gold is signaling higher lows, so it's a better place to put your money in at the moment. And also, you do have that Russia-Ukraine situation, there are, some people talking that, this thing could really get bad. So you have that geopolitical premium as well in there.
Yeah, absolutely. So do you consider the geopolitical tensions between Russia, Ukraine, if you want to call it Russia, NATO, Russia, US, specifically after Biden's remarks yesterday, which are not exactly the same with the Scholz remarks, of course, the German chancellor. So do you consider it as a risk, what is going on here in Europe?
It really, from the U.S. perspective and the U.S. media, they are really, discussing that it seems like every news bite is very harsh, very aggressive towards, if there is any kind of invasion. So from our perspective, it seems like it's a very serious situation based on what our media provides. And I think that is what's helping, elevated prices in wheat, in oil, in gold.
Final take, Phil. What's your comment on this 10-year Treasury yield at 1.95?
Oh, I think we might breach the 2%, but I think we're getting a little long in the tooth. It's one of the largest short positions is on U.S. Treasuries right now. So everyone's playing the higher yields. So again, I believe that we could disappoint. So we're probably going to start picking a bottom on Treasuries and also T-bonds for a small bounce back trade.
So while talking, the 10-year Treasury at 1.96, one up about 2.24%. Thank you very much.